blow apart the stock market and put it back together so that it makes sense for you. I'm Forbes Markets editor John Dobis. Well, you know, a lot of news now has accumulated. Good news for a change. Looking like things are up. The conference board's leading economic indicators up for the 6th month in a row. Looking like the recovery is finally taking hold. Unemployment down to 8.3%. Things are looking decent. Clint Eastwood, Ronald Reagan are icons, all very happy. News from GM. Is it morning in America again? Could it be, like the Beatles sang off of the Abbey Road album, "Here comes the sun"? Seems like years since it's been clear. Indeed, it does. Well, we still have clouds over in Europe. To stick with the British rocker theme, we could go to a Pink Floyd The Wall, where we have Merkel yelling at the Greeks, "How can you have any bailout if you don't do your austerity?" Yes, you. You behind the bike sheds. Well, for us behind the bike sheds, here in the U.S., the S&P 500 index has kind of shrugged off any drama in Greece, and Germany for that matter, cruising higher, 1361. We're barreling down on the high we had back in April of last year. Nice little ascent, as you can see, from December until now, riding the 10-day average higher than stocks. We had some inflation news come out today. CPI was up, but we're going to talk about one of the components of the CPI, the Consumer Price Index, the high cost of strapping on a feed bag these days. It's costing a lot more. The 12-month change in the Consumer Price Index was only 2.9%. Not bad, not too far out of the Fed's stated 2% level. But look at food, up 4.4%. Food at home, the stuff you buy and you actually cook, 5.3%. Nice turkey. And away from home, 3.1%. But the stuff that you eat away from home, well, you know why people are paying up more to eat at home, because Soylent Green is people. Classic 1968 Charlton Heston film. Now let's talk about some food companies and ways that you can capitalize or get hurt from the higher costs of food prices. Smucker's this week said that their profits were lower because of lower demand. Lower demand. People could not eat more jam because they couldn't pay for it. Or maybe they were stealing them from hotels and Waffle Houses, places like that. But Smucker's is in a jam. The stock was down roughly yesterday. It was at $80. It's at $72 now. $8, 10% lower. Smucker's not looking too good. Don't catch that falling knife. On the other side of the equation, H.J. Heinz and Company said that their profit was up just fine, ahead of expectations. Sales up about 12%. Going to smaller packaging. People can't pay as much. We'll give them less of it and charge less. Works for Heinz. Heinz stock was up about 5%, 4.5% today, $54, meeting the old high right before 2012. H.J. Heinz got some strength in it. Warhol, classy guy, good artist, good soup. Soup is good food. Soup is good earnings, actually. Campbell's Soup came out, beat the doors off of expectations. The stock jumped up 2.7%, not bad on Friday, looking good. Whole Foods, let's talk about some retailers that sell food, unprocessed good food. Whole Foods is not just your average grocery store. Whole Foods is kind of like the Nordstrom of grocery stores. You get people who don't have income issues that go there and they pay, $9 for a plum or something like that. Whole Foods, the stock, looking great. Look at that chart. Technical strength, big up days, the absence of huge down days, going higher. People got some cabbage, they're going to spend it at Whole Foods. Kroger, not as good. Kroger's more of the gotta go buy some chicken, gotta go buy some store brand soda crowd. Nothing against that, but I'm in that. $24 a share, looking higher than it was a few months ago, but obviously not the vim and vigor that you see in shares of Whole Foods. The farm is looking good these days, folks, huh? If you bought some acreage about 10 years ago in Iowa, you probably have a condo in Naples, Florida now because of all the money you made on that farmland, which has gone up in value 4 or 5 times. Who's the beneficiary? Guys like Deere and Company. I know they had some issues this week. Looking forward, they said, oh, gee, our forecasts are down. Maybe later this year they're going to say, hey, our forecasts were a little bit bearish. They're not that bad. But you see Deere fell to its 50-day moving average. One thing to be pointed out here is that strong stocks on their way up tend to rest at the 50-day average. You don't like to see huge volume like you got right here in Deere the other day, but if it stays at 50, could be good. Caterpillar, of course, is nice too. The land of Canada, Mounties. What do you have up there? You have potash. Potash of Saskatchewan. POT is the ticker symbol. They make fertilizer, so they make the farmland more productive. Look what's going on with that stock. Bottomed out after Christmas like a lot of stuff did that had a hard time in 2012. Big January effect at play here from $40 to $46. Looking nice. Buy some pot. Agrium. Agrium is another competitor in the fertilizer space, moving from $63 to $82. That's just in 2 months, folks. Agri them. So buy the stuff that makes the land more valuable and the food come out better. And have a very happy President's Day, and think how lucky you are to live in a country that had these guys as presidents.